Let's check in with Alexis Christoforous on the New York Stock Exchange. And Alexis, you, as I should note, recently spoke with NYSE President Stacey Cunningham about the outlook on IPOs. Tell us more about that.
I most certainly did. Thanks, Zach. Yeah, 2020 shaping up to be another good year for initial public offerings. Investors anticipating more unicorns to come to market, particularly Airbnb and Palantir. And I did sit down recently with the president of the New York Stock Exchange, Stacey Cunningham, to talk about the state of IPOs and how investors are starting to hold these newly minted public companies to a higher standard. You're talking about publicly traded companies versus private. Congratulations, because the New York Stock Exchange once again was first in terms of capital raising last year. Nearly $112 billion in proceeds raised, mostly from IPOs. What does the IPO pipeline look like? I know we're early in the year, but what does it look like right now?
Yeah, I think each year informs the next year in some way. And so in 2019, what we saw was really a mixed bag when it came to IPOs. Early in the year, the government was shut down. So there were no IPOs in the first quarter. It's hard to
right. It seems like a very long time ago.
But it was just a year ago that the government was shut down. Fast forward to the second quarter, it was very busy from the IPO in the IPO market, because there were so many companies that had queued up, not just coming off of the shutdown, but also coming off of the volatility that we saw in the fourth quarter of 2018. So again, you saw companies queuing up because on a 10, 11-year bull market, they're starting to wonder, is the window perhaps going to close? So should we be ready? So what we heard from companies throughout the year was they wanted to be ready to go. In the second half of the year, it was a slightly different story. Investors, for a number of reasons, started asking questions they hadn't been asking for a while. So,
like, where are the profits?
Like, where are the profits? Right. Or how are you going to get to the profits? I think investors do have an appetite for a company that's not yet profitable, but they want to know what their plan is. And it was no longer growth at all costs.
Right.
And not just about profits, which I think was an important question for investors to be asking, but also about governance and discipline. And there are a lot of things that we've been asked by investors to take a stand on. And where I really think we saw the pivot in the end of the year was investors saying, you know, we have the money. We can take this stand, because our view is investors should have access to the vast majority of opportunities, and then they should vote with their money, because it's really important that we not deny them of those opportunities, but they need to use their vote. They are the ones with the cash. And so what we saw now coming into 2020 is investors are asking a lot tougher questions of companies, and you're seeing they're asking more about the valuations. And I think that's a good correction for the market, because we want to make sure that the public markets don't become just an exit strategy, that they're still a growth strategy. And the valuations from the private markets are just a starting point. Nothing values a company better than the public markets, especially here in the US. And so we have a very strong pipeline of companies lined up to come out. And as we see investors start to reward those that have the stories that make sense with a path to profitability and good governance and good discipline, and they perform well, I think you'll see the window continue to open.
Yeah, the exchange recently modernized its rules to allow companies that are not profitable yet to list here, and I'd imagine that opens up a lot more business opportunities for the exchange. But at the end of the day, is it really in the investor's best interest to help companies that are not yet profitable go public?
Yeah, I think it's in the investor's best interest to have access to those opportunities and to be informed about what the real data is. And if you think about companies that have come public pre-profitability, they have that growth very, very rapidly, and you want to make sure investors have access to those rapid growth years earlier in their life cycle. A company I like to highlight, you look at Salesforce. It became public just over 15 years ago, and they're up a tremendous amount, 3,300% more than that since their IPO, and that compares to less than 200% in the S&P 500. We want investors to have access to those opportunities, but to be educated and informed on what the real data is and what the prospects are for a company. So I do think it's important.
And of course, direct listings, we talked about those as well. Stacey Cunningham expects more companies to go that route, especially the big tech unicorn companies that don't need to raise money when they go public. They're looking for a liquidity event for their investors. So of course, a direct listing is when you're not issuing new stock to investors. We saw it happen with Spotify and Slack, both here at this exchange. She expects more of that to happen this year. Zach?
Yeah, we could be seeing that out of Airbnb. A lot of people waiting for that one. But Alexis Christoforous on the floor of the New York Stock Exchange. Thank you so much. Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.